Gareth, who's going to take us through, I think, diversion expense in the first instance. 76, I should say, shouldn't I, Gareth? And then diversion.
Indeed. I think we're going to go for a poll first, Tom.
We are. Excellent.
Tony, if you want to launch this poll, that'd be great. So this is unrelated to the subjects we've talked about so far, but which clauses have been published most recently by the Aviation Insurance Clauses Group, AICG? This, of course, is the body that's responsible for publishing all AVN clauses. So is it AVN 144 and 143, 57B Australia and 141, or 144 and 57B? Take your pick from one of those three options. Which ones were published most recently by AICG? Just give it a few more seconds for everyone to have a vote on one of those three options. Okay, Tony, should we have a look at the results? Oh, that's interesting. So a complete mixed bag there of what people thought were published most recently. The top one would be the obvious one to go for, given that clauses are published chronologically. But in fact, the correct answer was the third one, AVM 144, the diversion clause, and AVM 57B Australia. So the 57B clause was updated recently by AICG. And that really just serves as a reminder that anyone in the market, any market participant, be they broker, underwriter, client even, can make a request to AICG to review any of the existing AVN clauses. So if you see something in a clause that doesn't look right, it's become outdated, which was the case with 57B, then you can make a request to AICG and that will be considered and potentially a new AVN issued or an updated AVN issued. Okay, thank you, Tony. So if we go to the next slide, next up, we're going to look at AVN 76, which is the supplementary payments clause. And this really is a market standard clause that is used incredibly widely across the market and really is there to recognize that in the event of an occurrence, if you've got, say, an aircraft accident, there are many different expenses that the insured may be incurring that are not related to either the hull damage or bodily injury and property damage for a third party. So this clause is really there to provide that insurers will pay for expenses for certain named perils, if you like, that the insured may be incurring. So it's widely used on GA and airline risks and typically will be provided as an additional limit under the policy subject to an aggregate. It can apply to the hull and liability sections of the policy. And it's important to note that just because we have an AVN 76 standard clause, it doesn't mean that it has to be used in a standard manner. So quite often you're going to see this clause either modified, additional paragraphs added to it, or indeed certain paragraphs not included, depending on the risk, depending on the appetite from the underwriter, and depending on what the client's needs are. Should also say that if this is going to be used on a non-aircraft risk, which does also happen, then it does definitely require amendment. If you'll see, for example, in paragraph A there, it talks about for an aircraft insured hereunder. So if you've got a non-aircraft operator risk, then you need to make sure that that's amended to fit the risk that it's attaching to. Couple of other things just to note that when each of the paragraphs A to D talks about reasonable expenses, and this concept of reasonableness is prevalent, in the insurance market, we need to make sure that the expenses that are being incurred are reasonable, and that is what insurers will indemnify the insured for. It is sometimes the case where expenses incurred are not necessarily reasonable and something is above and beyond what insurers would expect. So it is viable that the claims handler should consider whether the expenses are indeed reasonable for the circumstances that are presented. So the four standard items that are covered are, firstly, A, search and rescue operations. So obviously, if you've got an aircraft that goes missing, there's going to be a search and rescue operation that happens subsequent to that. And this will provide expenses that are incurred for those search and rescue operations. However, it is worth saying that those costs are not necessarily going to be for the insured to pay. Quite often in a scenario like that, you have a government or some kind of public authority that picks up those expenses. So it's not necessarily the case that for every missing aircraft and the search and rescue that happens after that, it's not necessarily the case that the aircraft operator will be liable for those costs. The second one, paragraph B, is runway foaming. And quite often you're going to see this amended to also include aircraft foaming. So if you've got an aircraft that's going to make an emergency landing, foam may be applied to the runway, or indeed once it's landed, foam may be applied to the aircraft to prevent post-accident fire. So the costs involved with that, which may be recharged to the airline from the local fire department, those costs would be covered under AVN 76. The third paragraph, paragraph C, is wreck removal. For those of you that were here on session 1, you'll recall that under AVN 1C, there's no right of abandonment of a damaged aircraft to insurers following a loss. So if the aircraft's crashed on the side of a mountain and insurers have paid for a total loss, removal of that wreck from the side of the mountain is not insurer's obligation, save for the fact that expenses may be payable under this AVN 76 clause to remove that wreck, dispose of it, etc. And then the final one, paragraph D, are expenses relating to a public inquiry or a CAA inquiry following an aircraft accident that was insured by this policy. I guess that's something that may become more prevalent as time goes on, that there may be more inquiries into accidents, and expenses which are related to that may be covered again by AVN 76. I mentioned earlier that 76 is quite often modified, expanded, and we will see in some policies that the ABCD list goes on EFGH with other items. Some of those ones that you might see are fire and crash control expenses. So expanding a little bit upon the foaming paragraph to pay for fire and crash control expenses that may be recharged again by a fire department. Another common one is the use of an EPIC center or an emergency procedures information center, also a crisis management center. So if you have a major airline accident, quite often you're going to see the airline set up a specific center to manage that accident, quite often hosted by a third-party organization, usually at some considerable expense. So those expenses can be covered by 76 in a modified 76 clause. The next one that we quite often see is this long paragraph that talks about sustenance, first aid, hospital and medical services, funerals, burials, repatriation of bodies, and any other acts of humanity. Now, these are to cover costs where there is a significant level of crossover between what may become a bodily injury claim. But the distinction here is that some of these costs, so for example, first aid costs, hospital costs, these are not necessarily where legal liability attaches. But if the insured is responsible and pays out reasonable expenses for first aid provision immediately after an accident, they can be covered by 76, irrespective of whether the insured would be liable for those under a bodily injury claim that may come after the event. And then the final one that I just wanted to mention was diversion expenses. Quite often we see 76 appended to include costs arising out of an unscheduled diversion of an aircraft, added in as part of the AVN 76 clause. So there's some of the things that you might see, the standard clause, and some of the amendments that you might see to it. If we move on now, Tony, the next thing we're going to look at is AVN 144. I mentioned just a moment ago about diversion expenses. And AVN 144 is the most recent clause published by AICG and came on the back of a market request to look at diversion clauses that were in the market, because there was no AVN clause prior to AVN 144 being published, but there were diversion expense clauses on a number of airline accounts with various different wordings. And AVN 144 is intended to address the variations that have been found within clauses in the market. And typically you're going to find this applied on an airline risk or another risk with commercial passenger transportation exposures. if we just look through the clause, then it's triggered by an in-flight incident, and that's a defined term that we'll look at in a moment, which causes the aircraft to divert to an unscheduled airport, and then provides that insurers are going to pay for additional cost, charges and expenses necessarily incurred by the insured, up to a maximum sum insured, potentially less a deductible, for very specific things listed as items 1 to 4. So it's not intended to pay for every cost that the airline may incur when an aircraft diverts, but it's to cover these specific expenses. So they are fuel, airport services, whether that's directly to the airport for additional air traffic control for landing at the unscheduled airport, additional ground handling services that may be required. The third one, transportation of passengers and crew members to the next scheduled airport. So if the aircraft diverts and for whatever reason that aircraft can't continue its journey at that point, then the onward transportation is going to be covered by the AVM 144 clause. And then finally, sustenance and accommodation, which is required as a result of the diversion. So normally you're going to see that an aircraft diverts and then the aircraft's going to be sat on the ground for some period of time. If it requires an overnight stay, hotel accommodation will be paid for by the 144 clause. Food, drinks that are provided for sustenance of the passengers and crew will also be picked up by AVM 144. If we then look at the next slide, please, Tony, we're going to have a look at what an in-flight incident has been defined as. And this was something that AICG grappled with at length when they were coming up with the Sabian clause as to what should be the triggers for a diversion as covered by this clause. And it really boils down to 2 parts. The first is a medical emergency. And this one is kind of understood. You know, we see quite a few medical emergencies on flights. Could be the crew member, could be a passenger on board that has a heart attack, for example. They decide to make an immediate diversion. Expenses arising out of that are to be covered by 144. The next category that we've got are perils that threaten the safety of the aircraft or a person that's on board the aircraft. So that might be actual or suspected damage to the aircraft. So let's say the aircraft suffers a lightning strike mid-flight, or it flies through a severe hailstorm. If the captain decides that the aircraft might have sustained damage which threatens the safety of the aircraft, they make a diversion to an unscheduled airport, then those costs are covered by 144. And then the other element that may threaten the safety of the aircraft is passenger or crew action on board. So if you've got a disruptive passenger where, in the captain's opinion, that's threatening the safety of the aircraft, then if they divert to an unscheduled airport, then those costs will be covered by the AVM 144 clause. I mentioned earlier that it will be subject to a limit. The clause provides for a limit to be inserted. And that can be any one landing limit. It could be an aggregate limit. That's up for brokers and underwriters to decide. And there is also a provision for a deductible to apply to each diversion. Tony, if we go now to the next slide, I think we're going to have a quick poll next about diversions. So if we put the poll up, Tony. So in 2019, pre-pandemic, how many commercial passenger flights had to divert to an unscheduled airport? And this is according to the website diverted.eu. And I should say that they only track commercial airline flights and only diversions that affected a single aircraft. So it excludes any events that are affecting multiple aircraft at a time. For example, if you've got a weather at an airport or a strike, only single aircraft diversions. How many in the 2019 calendar year were diverted? If you pick an option there, we'll give it a moment and have a look at the result. Okay, looks like most people have made a choice. Tony, should we have a look at the result? Again, a bit of a spread there as to how many flights people thought were diverted in 2019. I can tell you the actual answer was 2,255. So quite a number of diversions, and the most common one was a medical emergency. A bit of trivia. Okay, Tony, let's move on.
And I think, Gareth, we do have a couple of questions, and it seems like a very good time to take them. Just before I raise these, I would reiterate exactly what you mentioned there about AICG, Gareth, in that any stakeholder in the aviation market can make requests of the AICG. And then we should also note that the AICG is required to consult on all of the clauses it publishes. As we said, most recently, that was in the case of 144, and we had lots of fantastic comments come back from the market during the consultation process, which are considered at great length and do very frequently lead to amendments to the model clauses. So I would encourage everyone to get involved. If you don't receive AICG consultations, do let me know. You can find my email on the IUA website. I'd be more than happy to add you to the mailing list. Okay, so Gareth, if we just move on to the questions. The first one that has come through asks, when the clause references crew, is crew to mean pilots, as other clauses often say pilots and crew? The individual assumes that it is both.
Yeah, absolutely. That is our intention, is that we're talking about cockpit crew and cabin crew, so including pilots. That's the intention.
Okay, thank you. And then a question here about a potential scenario that could arise. So the scenario that Victor has in mind is, could a false alarm on board be considered as an in-flight incident?
Okay, so without straying too much into me pretending to be a lawyer, I guess we don't know what kind of false alarm we're talking about, but if, say, we were talking about a cargo fire indication, so the cockpit warning says that there's a fire in the cargo hold, captain decides that the aircraft might have been damaged by that, and they divert, then yes, absolutely, I would expect that to be covered as an in-flight incident under paragraph B. So yeah, I think a false alarm which indicates that the aircraft might have been damaged or it's threatening the safety of the aircraft, then I think that is within the scope of what's intended to be covered by 144.
Okay, yes, thank you very much for your best lawyer impression there, Gareth. Thought that was perfect. We do have one other question, but I'm just going to review that and perhaps consider it towards the end of the session. As the individual points out, it does talk about some negotiated items. So we'll take a look at that and move on just for the time being, Gareth. So sure. I think that will be to additional cost of working.
Yeah, sure.
Thank you.
Okay, so Tony, if we go to the first slide, thank you. Additional cost of working is quite an important concept, and we wanted to include this, notwithstanding there isn't an AVN clause for additional costs of working. What I've put up on the screen is a sort of basic standard additional cost of working clause. So if we just go through it, so in the event of the total loss of an aircraft insured under the policy, insurers agree to make payment in respect of additional costs of working. Such payments are in addition to any other amounts payable under the hull section in relation to the total loss, and shall be for the following amounts, which there would then be an amount stated. This is primarily found in use on airline risks and attached to the hull or hull war coverage. And it will typically be for a fixed dollar amount in addition, which is payable in addition to the hull value of the aircraft. And really the background behind this clause is that it recognizes that if you have a total loss of an aircraft, as an airline or an aircraft operator, there are additional operational costs that you're going to start incurring related to that aircraft no longer being in your fleet. Costs that are required for you to incur to get the operation back to what it was pre the loss of the aircraft. And that could be a multitude of things. It could be you need to have another aircraft available to operate the routes that were supposed to be operated by the aircraft that's now been lost. It could be that you need to handle the media response to the accident and the total loss of an aircraft. It could be that you're incurring additional staffing costs because you've got many of your staff working overtime to handle the incident. You're using banks pilots, for example, because you haven't got the pilots to operate the aircraft that you're now operating instead. It could be any number of things that are these additional costs of working. And that's important to note that the insured doesn't have to justify what those costs of working are, nor indeed that they have actually been incurred, nor indeed that they actually will be incurred. But this is a fixed amount of money that's paid in the event of the total loss. So let's say, for argument's sake, total loss of the aircraft and there's an additional cost of working limit of $1 million. The $1 million is paid in full to the insured without any justification as what's been incurred, but with recognition that they will be incurring some kind of costs to restore the operation. And that really covers what additional cost of working is. Now, there isn't an AVN clause for it. Perhaps there will be one day. To my knowledge, that hasn't been requested, but if anyone's got a burning desire, then potentially there would be an AVN clause for that in the future. I'm going to move on now to the next concept of non-aviation excess liability. This is something that's quite prevalent in the market. Aviation insurers providing excess coverage for non-aviation risks. And now, typically, this is going to be provided via an AVN 37B form, which is the excess liability form used in the aviation market. And it's usually provided with a standalone limit. You're going to see a $25 million standalone limit used very often for this coverage. And that limit will typically apply on an occurrence or accident basis. And if the underlying policy has an aggregate limit, then the excess layer provided in this policy will also apply on an aggregate basis. As I said, it is excess, so it only applies once the underlying limits have been exhausted. And the underlying policy, A, has to be there, and B, must be maintained in full force and effect for the excess coverage to be triggered. So as we've said there, it pays damages arising from risks and hazard covered by underlying legal liability policies. It has to be a liability policy that's scheduled underneath. And typically the ones that we see most often are employers' liability policies and auto liability policies. So whatever underlying limit the insured buys, they then get a little top up under their aviation program with an additional limit provided. Now, an important comment about this is that the coverage is subject to the same terms, conditions, exclusions, etc. of the underlying policy. So whatever the underlying auto liability, for example, policy says, this is the coverage that will be provided under our policy. It's not subject to the aviation policy's terms and conditions, which of course wouldn't make any sense in the concept of an auto liability claim. We do have some exclusions. So financial default and insolvency are excluded under the form. This is to make sure that we're not going to pick up claims which relate to the failure of the underlying insurer to pay. So if there's a financial default on behalf of the EL insurer, then we're not going to pay the excess layer just and drop down because the primary hasn't paid out. Typically, we're still going to be covering bodily injury and property damage under a legal liability policy. So in an auto sense, we're still going to cover third-party bodily injury and third-party property damage arising out of an auto accident. But we will be using the BI and PD definitions as found in the underlying policy, so which may be different to the BI and PD definitions that we have under the aviation policy. So it is important for underwriters and insureds to recognize that the coverage being provided here is a follow-on from the underlying policy, and that the aviation terms and conditions are not going to apply to that loss. Now, there is a slight nuance there that may occur in that some of the aviation core exclusions that we've talked about in, was it session 1 or session 2, some of those may still apply to the coverage. So clauses such as 46B or 48B, depending on how the policy has been structured, some of those core aviation exclusions may still apply. You're also going to have things like your AVN 111 sanctions clause, which remains paramount and would likely still apply to this non-aviation excess liability cover. So if you have got one of these non-aviation excess claims, it is very important that you look at exactly what the coverage is that's provided, and to check whether you are on a pure follow form or some kind of hybrid where some of the aviation clauses also apply. I think that actually brings me to a close on non-aviation excess liability. Tony, I think that might have been the last slide. So now we can take any further questions that people have on additional cost to working, non-aviation excess, or indeed any of the other subjects we've covered today.
Thank you very much, Gareth. I was impressed by the speed and efficiency you managed to apply to cover those two areas so comprehensively. And you're right, that does leave us some additional time for Q&A. So please do provide any burning questions, or equally any questions you want to pose to our speakers that are on your mind. We'd be very pleased to consider them in some of the time that we have remaining. We'll just hold on for probably a few seconds, see if there are any questions coming through. And if not, we may have covered all of the bases that we planned to do so. Yeda, is there anything else that you wanted to raise before I make some closing remarks?
No, I don't think there is, other than perhaps we should say that if somebody do think of something they would like to raise, they can send a note to you before the next meeting, and maybe before, maybe by end of day tomorrow, and we can get the answers prepared for the next session.
Yeah, that'd be fantastic. We're more than happy to receive those questions in advance. Well pointed out, Yeda. Do send them across, as Yeda says, by close of play tomorrow, if possible. Of course, ahead of Thursday's session, and that will be the concluding session of our 4 aviation wordings masterclasses. We'll be considering core product and airport coverages. And of course, I'm looking in the round all of the sessions so far and dealing with any outstanding questions. Just as I was about to close, I can see that a question has come through. So one for you, I think, Gareth. It was briefly mentioned that there could be coverage for expenses, e.g. relating to medical fees, even if there's no liability for bodily injury. Could you expand on this point?
Yeah, so quite often we see under AVN 76 an additional paragraph, although it doesn't have to be under AVN 76, we also see it incorporated in other parts of the policy, where it says that insurers will pay for necessary first aid, treatment, hospital fees, repatriation of bodies, this kind of thing. And the point there is that these are expenses that may be incurred. There has to be an occurrence, first to say. There has to be an occurrence under the policy, so an aircraft accident or whatever else that triggers an occurrence. But the insured doesn't have to be legally liable at that point for the bodily injury. So if there are first aid, so let's say you have a hard landing of an aircraft, passengers sustain injuries, immediate first aid provision after the event, we would cover the costs of that, even if it was found after the event that the insured, the airline operator, wasn't actually legally liable for the bodily injury that was sustained by those passengers. The first aid expenses would still be covered. Does that answer that question, Tom?
Yeah, I think it does. Was there anything you wanted to add on that particular point, Yeda?
No, thank you.
Okay. So a question I think I'll put to you, Yeda, in the first instance. Is it common for cut-through clauses to be used in addition to finance contract endorsements? Yeah, did you have any comments on that
Yes,
one?
it is.
Okay.
Because a cut. Sorry, was that for me or was that for Gareth?
It was for you.
Right, I'm happy to take it. Cut-through clauses are a very common requirement in when it comes to lease agreements or other agreements between an owner of an aircraft and an operator of an aircraft, because where you have a reinsurance, the claims payment could be caught up in sort of local or would you say local requirements that it goes through the reinsurer. The cut-through clause will, provided it's legal to do so, will allow the reinsurers to pay the repair shop or the owner of the aircraft, the loss payee, directly without the cash actually going through the reinsured's book. It will be accounted, but the cash will actually not go through the reinsured's book, or through. You won't be paying it to the reinsured and then having the reinsured pay it out again. It's to avoid delays and to ensure that the aircraft can be operational and the owner's interest is fully protected. However, there are some countries where it's not permitted, and if it's not permitted to have a cut-through clause, then we can't do it. The reinsurers can't do it. They have to make the payment in accordance with the contract. So they pay the reinsured pays the insured, or pays the loss payee under the direct policy. AVN 109 is the standard clause in the market for cut-through clause.
Thank you very much, Yeda. Okay. Was there anything you wanted to add to Yeda's response there, Gareth?
No, nothing further from me on that, Tom.
Okay, and then there's a question here referring to the non-aviation excess coverage. So I'll put this one to you, Gareth. So the question in general terms, I think, is why do insurers typically afford a limit of $25 million in respect of non-aviation excess coverage when the underlying policy limits could be significantly lower?
Yes, a good question, Tom. Not sure to what extent I can really give an answer to that one, other than to say it has become a bit of a market standard that it's a $25 million, but insurers are free to offer whatever limits as they see fit. We do see examples where the limit is the same as the underlying limit, for example, but that is really down to underwriter and broker negotiation as to what limit is provided. But it is noted that the underlying limits are sometimes less than the limit provided by the aviation excess section.
Yeah, I think that covers that very well. Thank you, Gareth. So another question in respect of non-aviation excess coverages, and I think I'll put this to you in the first instance, if it's okay, Yeda. The question is, what are the coverage differences between a vehicle used as a tool and a vehicle in circulation?
Well, we do have to distinguish between the excess coverage. If we're covering and premises, the cover provided as premises. If a vehicle is used as by the operator under the for their business at the airport, then the coverage would normally be on a primary basis. The motor vehicle policy would provide the Road Traffic Act type insurance for the region where it's operating, and it may be that they're allowed to operate with a small limit, and therefore can top it up legally by having an excess insurance policy in place. We can't. Aviation insurers can't necessarily be the motor insurers if they are required to be licensed as motor insurers. But the aviation policy would generally provide full CSL for vehicles operated for various purposes airside, and that shouldn't normally be a requirement for Road Traffic Act insurance. But I'm not sure that that's really answering the question, because I'm not quite sure I quite understand the difference between this operating as a tool. Are you talking about motorized stairs and the like?
Yeah, I guess a question to the individual that posed that one initially. Just maybe before we hear back, if we do, Gareth, did you have anything to add on vehicle coverage in addition to the points Yeda raised?
No, I think Yeda's just sort of made a clear distinction there between what we'd expect to be covered as auto liability on an excess basis, i.e. RTA risks off airport, and what I think is what's being posed in this question. When we got vehicles being used as tools, I would expect those to be covered under the aviation policy if they're being used as a tool in relation to the aviation operation, whether that's a vehicle being used airside for passenger transportation or indeed mobile stairs or whatever it might be.
Okay, I think that takes us to the end of all of the questions posed. I think we covered quite a lot of ground there. So thank you very much, Gareth, and thank you, Yeda, and of course to everyone for providing us with some very good questions to consider throughout the session. So just some closing comments from me. Of course, I wanted to thank the 140 or so individuals that managed to join the session today, and we've had some similar excellent numbers at the first two sessions. So thank you very much. We do, of course, hope that you are able to join us on Thursday for the final session. As I mentioned, it's not too late to register. I'll just send my email address into the chat so that if you haven't got that, you have now, and you can contact me if you would like to register. Additionally, you can also use my email address to provide any questions that you didn't get the opportunity to ask today or maybe come to mind after the session, and we'll be more than happy to consider those at the start of session 4 on Thursday. Lastly, as promised, we will be circulating a link to the recording from the session along with the presentation slides. It will take us a day or so to agree the recording, so do please bear with us. And with that, I can say a final thanks to Gareth and Yeda yet again for their fantastic insight and knowledge that you've shared throughout the session. And of course, we'll look forward to speaking again on Thursday. Thank you very much.
Thank you. See you on Thursday.
Thanks, Tom.